What is up, everyone? How are we doing today? It is March 31st, 2026, and today I'm going to be going over today's price action, the trade I took, and how I lost $600 on that trade. Yeah, it sucks, it happens, but whatever. This is not financial advice. I don't know what I'm doing, and let's get into the video. All right, so coming into the day, I was originally bearish just because we didn't really have too many draws that we were going to continue up. Obviously, the one thing that stuck out like a sore thumb is this unmitigated 4-hour gap. Now, in this situation, I would love for price to either re-tap into this and continue upwards, or if we wanted to continue pushing lower, we totally could. One thing to note, though, is with trading, we definitely need to pay attention to geopolitical events and what's happening in the world. If you're not paying attention to the news, if you're not reading or listening to any sort of materials, then you are not going to be trading as well as you probably can be, right? You have to go over external biases too, because things in the world can change if the market's either going to go up or down. Just because there's candles on a chart doesn't mean we're just going to follow those exact rules and just go by that. We have to also keep into account external factors such as the president speaking, worldwide conflict, etc. Now, this morning, the president spoke and was saying, oh, we might be closer to an end in this war than we really think, and a conclusion is probably going to arrive soon. So what can we expect? We can probably expect the market to shoot up and continue with bullish conditions. Now, obviously, this is an assumption based on external factors. However, it is incredibly important to the overall direction of the market. So just keep that in mind. Now, if you look at the market, you can clearly see we are trending lower. However, we are creating this V-shaped formation, and we definitely can see potential to go to the upside, depending on news and how today plays out. And one other major draw I want to take note of is this 4-hour unmitigated gap. Any type of unmitigated gap, especially on the 4-hour or 1 hour, are very good to look at. Price is usually always going to draw and react off of these levels. And if we go into the hourly chart, this unmitigated 4-hour gap is lined up with this hourly intermediate high, which is also a very good target. So we can clearly see that those are stacked highs, and price can definitely take a drawing up to those. Now, what can we do from those levels? Either we can continue to displace upwards from them, or we can react off the bullish gap and push down. Now, that is what I wanted to see in the market. I wanted to see price push down and go lower. And when we are looking for our draws, what do we have? We have obviously that 4-hour unmitigated gap. And also we have to pay attention to session liquidity. With ICT and SMC concepts, we know that a ton of the strategy is based off session-based liquidity. And that is exactly how we are going to trade. We are trading with the same concepts and same mechanical models that take into account with session-based liquidity. So session-based meaning previous day highs, previous day lows, London session, Asia sessions. So that's immediately what we're going to look for. And I'm just showing you my exact thought of mine coming into the market. If I wanted to, I could have just showed you what trade I took and that's it. But I just want to show you more sauce and kind of how my brain works and what I'm thinking. Now for session liquidity, obviously we have a kill zones indicator. And what can we see? We have London lows stacked at this 4-hour unmitigated gap. So this is obviously the clearest and heaviest liquidity draw. And one thing to note, please do not just start marking out every single session liquidity. For example, we have Asia highs, London highs right here. There is no need for us to just go mark these out and try to target this. We already swept both of these levels out. And what is there? There's no confluence. There's no draws. Price currently is already bouncing around these levels, so it is just irrelevant. And when we have London lows under us combined with that 4-hour unmitigated gap, okay, that is how you develop a clear draw on liquidity. So that is exactly what I want to see price target. So I am very bearish in this scenario, and I definitely want to see price react of two levels. One is we have this 4-hour gap right here, and we also have this 4-hour intermediate high, which coincidentally is the same hourly intermediate high. So I either want price to come up to this hourly high, or realistically even better if we can get confirmation up to this 4-hour unmitigated gap and then take shorts to London lows and this 4-hour unmitigated gap. I'm just writing its London lows just so you guys can see more visually. And so yeah, what do I want to see happen? We have the hourly intermediate high, unmitigated 4-hour gap above us, and I just want to see price hit one of these levels. If market opens higher, we're going to wait for these levels to react and see if we get an inversion and take them to these lows. Now, this is the same exact way I trade, and I am only taking trades that I make a narrative to. What do I mean by that? Now, the key to having a high win rate is making sure you have a narrative. If I am going to say, price wants to hit one of these levels and then to have an inverse to the downside, then that is what I am going to wait on. I am not just going to take a random inversion to the upside or a random inversion to the downside with no story behind it. I am building out the exact plan for what I want the trade to do and then executing it based off that. The execution is the least important step. It's actually building a narrative and seeing what price wants to do. Now, one thing to note is that we don't necessarily need to come up all the way to this higher time frame gap. Of course, the higher time frame is going to be a stronger draw on liquidity, and we do have this unmitigated gap that I would love to see price run to. However, if we look at the hourly, we are currently sitting in this bearish fair value gap. We have this clear bearish gap right here, and we have not taken this out whatsoever. Now, one thing I would love to see is that we have intermediate highs, which happen to be equal highs right here. So if we do end up taking this, I would love to take a short down to London lows. I'm just going to remove this red box because it is very distracting. However, I'm just going to mark this out and see what price wants to end up doing. So we're at 929, 1 minute before the market opens. And what happens, we can clearly see that we just displace all the way up and we end up tapping this gap, right? Now, what is this gap? This was those equal highs, and this is something I would really want to see a short opportunity off of. Now, what do we get? We get exactly that. On the 1 minute time frame, we tap this key level we wanted to see get hit, and now we are going to look for an inverse, and that is exactly what we created. We opened up these two candles and created this huge candle to the downside, giving us huge displacement. Now, seeing huge displacement after hitting that key level where you wanted to inverse off is such a strong indicator that price wants to continue going down that way. And what did you see? We created this gap, we inversed it, and this is exactly where I took my entry. I had my short right here, and what did we target? Now, in this situation, I know that we have London lows, and I would love to see price go to this. Now, me personally, because of how prop firms work and because of conditions and consistency rules, I rarely take such high RR trades like this. You might say, oh, well, a 3 RR trade isn't that high. No, it's not, but everything is in perspective. And with prop firms and all these consistency rules, you are rewarded for taking much lower risk trades, but having a higher win rate. And that is exactly what my model follows, right? I know how the game works and I know how to play by their rules. So that is why I am able to be consistently funded. Now, in this situation, I would have my stop loss at the body of the candle. And I would love to just either target a nice 1-to-1, or we did have this major swing low right here, which would have been a great target. Yes, this increases the risk reward ratio by a little. However, this is something I would probably take my target at. Instead of a 1-to-1, obviously that's very conservative. You can easily take that, that's fine. But if we have a big target, if we have a big key level, we clearly have this swing low right here, and I am going to target that. Now, what ends up happening is we just completely displace the other way and we get stopped out. And it's simple as that. We just lost that trade. Now, why did we lose this trade? It's just because there were too many external factors in the market that caused us to be incredibly bullish for the day. Now, like I said earlier, there were talks about negotiations and being close to an end of a war. And obviously, this is going to create huge bullish momentum in the market. And that is exactly what ends up happening. If we can clearly see, I'm just going to go in the app. I'm just going to get out a replay, honestly, so you can see. This was that trade. And look, we skyrocketed up. We went 500 points in that move. And I'm not saying this is an excuse to why to lose trades. I'm just saying that external factors are very valuable. And being able to access this information and seeing what's going on, what's being tweeted, what articles are coming out, what major news events happening, this can help your trading so much if you learn how to utilize it. As if we are going to continue bullish and have our upward momentum due to positive talks on the internet, then we can clearly base our biases around having a bullish bias. And we could say, okay, I want to see continuation longs. In this situation, maybe we tap back down, but we know positive news came out. Okay, maybe I'm going to take continuation longs, and that's exactly what ended up happening. Now, of course, no strategy has a 100% win rate, and that is something I want to get to. This was a very perfect setup in my opinion. We also had a higher time frame SMT, which I do not think I mentioned. No, we didn't. But we had that. It was on my Discord. I posted my daily bias every single day. But yeah, no, not every trade is 100% win rate. This was a very clean setup. If this happened tomorrow or next day or whenever, I would have taken this setup every single day. And I'm not mad at I lost this trade at all. Why am I not mad? Because this is exactly the same exact trade I would take every single day. It followed my rules. We tapped our major key level that we wanted to see get hit, and we had an inversion off of that. And all of that aligned with my higher time frame bias of being bearish. However, that was wrong, and we ended up being bullish for the day. Nothing we could do about that, but losses are great. Losses are great learning opportunities. I'm going to go ahead, journal this, see what I did wrong, write down my notes, and just improve from there. I take one trade a day max. I follow my rules, and it is very hard to not break those rules, as losing a trade and revenge trading is like easily probably the most common mistake and setback for a lot of traders, is because they lose a trade, they lose $600 on a trade, and they just have nothing, and they're like, damn, I need to make this loss up. I'm down 49,500 on my funded. I need to get it back to 50K. All this stuff, a lot of excuses. And that is what happens when FOMO kicks in and revenge trading kicks in, because then you will just start losing and losing and losing, and it's a downward spiral from there. That is how you blow accounts. That is how you get cooked at trading. Do not do that. And that's honestly the best information I could have. If you can stick to one trade a day and not greed trading and not revenge trading, then you're going to be so set. And here are the execution marks if you don't believe me. And yes, I know I messed up. I screwed up. I accidentally placed like, it was a buy limit instead of a buy stop. And I had to actually manually close out the position. So that's why there's an extra execution mark. Yeah, I know it was weird. I like totally blanked on that. I don't know why. But yeah, that's a trade we took. We literally got absolutely cooked on it. But the idea was there. Everything was A plus in my opinion, and I'm not mad about it. And that's about all, right? That's the trade I took. I lost about $600 on the day, but it's fine. You know, we have wins, we have losses. As long as we're winning more than we lose, and that's all that matters. If you like this video, please like, comment, share, subscribe, follow. Anything really helps. Free Discord is coming so soon, so soon. It's worth the wait. And I'm excited to see you guys, see your guys' trades, wins, losses, everything. Just have a good community. That's what I want. And yeah, I guess I'll see you guys in the next video. Peace.